13th. Welcome to the Daily Energy Markets podcast. We have crude oil prices trading, I would say, little changed in Brent, but that downward trend, that sort of rock dropping through water, that might be a bit of an exaggeration. But certainly, if you take the cumulative effect of the last 2 months, it seems that the downward draft in the oil market seems to be the dominant draft. No matter how much you try to pump up the tire, it looks like it's got a flat, it's got a hole in it, and it just won't stay inflated. Let's kick off this morning with Neil Atkinson, former head of oil markets division at the IEA. Neil, a week after the morning after the night before, a week after OPEC Plus announced its cut, which obviously doesn't take effect until November 1st, it looks like the oil markets is just not buying it as sufficient enough, or it isn't reflective, or perhaps the job is done. Your thoughts on the decision a week later?
Well, the actual cut in the physical number of barrels that are affected by the announcement last week is, of course, going to be nowhere near 2 million barrels a day. It was a quota cut, not a production cut. And some of the ways in which it's been reported in the press and commented on, not by Gulf Intelligence, of course, but by a lot of other people, gives a completely false impression. And what we have seen in recent days, prices edging down again a bit, as you say, using your analogy of a sort of slow puncture, is again, we're back to where we were a couple of weeks ago before the OPEC Plus meeting, when the fear amongst a lot of the leading producers, let's leave geopolitics aside for a minute, the fear of the leading producers was that the risks in the short term and medium term of demand destruction outweighed the risks of further supply destruction as sanctions against Russia are implemented. And that was the problem. And, I've used this phrase before. We've had a lot of debate about demand and how higher prices have affected demand and how demand is going to come down and consumers are under stress. The phrase I've used before is producers have feelings too. They have economies to support. They have revenues they need to maintain. And for the producers, the possibility of prices sliding significantly was enough to make them decide to choke off a certain amount of supply to the market in the short term. And I think that's where we are. We can get into conspiracy theories about geopolitics if we like, but fundamentally the fear of demand destruction is there.
Dr. Carol Knackley, CEO of Crystal Energy, welcome back to the table. Producers have feelings too. Is that what we're seeing in the sort of war of words a week later between Washington and Riyadh? Is it a storm in a teacup, or is there something more serious here?
Good morning, Sean. Good morning, everyone. Well, of course, they do have feelings. We all do. I mean, they have interests. They have economies to protect, and we can understand that. But there are geopolitical implications for their decision, especially when you have a key member in the OPEC Plus, that is Russia, that is being sanctioned by the US, by the EU. So we cannot ignore the geopolitical angle, no matter how innocent the decision of OPEC Plus was. And I don't fully buy that it is solely based in economics or strategic interest on a commercial sense. It has broader dimensions because you have an important player who has more than greater interest than maybe other members of OPEC Plus in seeing higher pressure on prices. What does that mean for US? A relationship with Saudi Arabia? Of course, it's not a good timing. I've been arguing, like, if it was maybe a month later after the midterm elections, the US could have not reacted in the same way. We don't know. But the timing for these 2 million barrels a day, especially, before the meeting, OPEC Plus, there were rumors that they were talking about 1 million barrels a day cut. And then within 24 hours, they went to 2 million barrels a day. So that was a very significant cut, irrespective of whether we're talking about actual barrel versus announced barrels. And it has left a certain psychological impact, since we're talking about feelings here, on the US, on the Biden administration ahead of the midterm elections. And it's interesting, if you look at the popularity of Joe Biden versus the oil price, you can see how they are inversely correlated. So when prices go up, his popularity goes down. And this is not really the scenario that the US hoped for at this stage. That said, I don't think it's going to lead to deterioration of the relationship between Saudi Arabia and the US. It's not really such a fundamental problem to have at the moment for the US. The US still benefits from high prices, being the largest oil producer, and there are much greater interests between the US and Saudi Arabia that go beyond oil markets. So I doubt it's going to be a deterioration. I think it's the US expressing its discontent about the timing of the cuts.
Let's go to Osama Rizvi, energy and economic analyst, Primary Vision Network in Pakistan. When I looked at this decision first, I thought more about you, Osama, than Joe Biden in Washington. I thought about, wow, the implications for the emerging markets here is quite significant. Whatever the noise, Washington, Riyadh, or elsewhere, the emerging markets are really at the front line of this elevated energy burden. Your thoughts a week after this OPEC Plus decision?
Well, thank you, Sean, and hello, everyone. I believe the story here for us, for countries like us, remain the same. In either way, even if, as Neil said, and I agree with him, if demand destruction happens, and I think there's a more possibility for that, even in that case, we might save some dollars in terms of our oil imports, but our textiles and other exports may suffer. Our main market is the US, our main market is the European Union. So either way, recession or geopolitical risks, we're just like, between a rock and a hard place. It's not good for us. We still face a lot of budgetary issues. Petrol prices are still elevated. Food prices are still elevated in Pakistan due to domestic and international reasons as well. So overall, it's not a good place to be in. And after this decision, and I'm also trying to account for the Russian oil embargo, which would go into effect on 5th of December. So I think maybe there is a chance that we might see another spike in oil prices. Maybe it will be temporary, but that can have a lot of issues for us going into the new years.
Neil, I would say silence is deafening from Paris. The IEA have barely commented on this situation. I mean, I remember days gone by where the IEA would be out on the streets screaming when OPEC cut a barrel, never mind 2 million. Why is the IEA so silent here?
Well, I think if you wait an hour and 19 minutes, looking at my clock, they're publishing the oil market report this morning. And although I'm not privy to what it's going to say, I would not be surprised if the data that the IEA releases today suggests a slowdown in demand growth in the face of the economic uncertainties I was talking about. And, their balances, when they usually publish a nice little balance chart, or they did when I was there, should suggest that with the actual cut in the number of barrels that the OPEC Plus will supply, it's not such a drastic change to the balance. I mean, last month, the IEA was showing a market which was not very far out of balance over the next 2 or 3 quarters, even assuming further cutbacks in Russian supply. So yeah, yelling and screaming, that's not really the IEA style, but
excuse me.
They've been involved, of course, very heavily involved in the last few months with the emergency stock releases. That was a coordinated IEA action. So they have been very heavily involved in efforts to keep the oil price from having gone up to $139 for Brent in the immediate aftermath of the Russian invasion of Ukraine. The emergency stock releases have been an important component in helping to keep prices at relatively moderate levels. So yeah, an hour and 17 minutes now, and you'll be able to see what the IEA thinks.
So Fatih Birol will give cover to Riyadh's decision, Carol. Despite the geopolitical optics here, this market logic, it prevails because demand erosion over the coming 3 to 6 months will justify this move from OPEC Plus.
Well, there is definitely something going on the demand side, because you do have the economic outlook getting gloomier and gloomier. Just look at the IMF, their recent publication, their economic outlook, and they once again downgraded their economic forecast compared, for example, to their January outlook. And the economic growth is a major factor, a major influencer when it comes to oil demand. So that definitely we understand. But it's interesting also, it's not just the IEA report, which is coming out today. Yesterday, the OPEC published their monthly oil market report, and they downgraded their forecast for demand growth for this year by 500,000 and also for next year. But it's interesting, even though it's a significant downgrade, but actually they are becoming more closely aligned with the IEA's previous forecast for oil demand for this year. So it'll be interesting to see what the IEA's forecast for oil demand, what they are going to cut it further. But at least the gap that we saw almost consistently between OPEC and the IEA in terms of oil demand for this year seems to have narrowed recently. And that by itself could give a justification for OPEC Plus decision last week.
Just to pick up on that, Carol, as we do splice the minutes of the Fed meetings, as we did just in recent days, the market were reacting to the Fed minutes. Similarly, with the OPEC decision, it would appear, as according to reporting, that the UAE and Iraq were not on board with this decision. Obviously, they went along with it, but because it's a consensus decision-making body. How do you read into that, if indeed taking that reporting as relatively accurate? Because we did see, obviously, the UAE a year or so ago standing against the quota structure.
Yeah, I have mixed feelings about it because I don't know, I try my best to try to simplify it because of the contradictions I hear in these kind of statements and publications. Primarily, okay, you want to be proactive because you want to avoid the scenario of 2008. You want to avoid prices to crash. But by cutting production relatively significantly, you are putting upward pressure on prices. And prices already were, energy prices along food prices fueled inflation. And that has led central banks around the world to tighten their monetary policy, to increase the interest rate and therefore accelerate the route towards a recession. So I'm not quite sure how to reconcile their logic, because if you want to really minimize the risk or the pressure on recession or on economic growth and the fear of a recession, then you wouldn't go in the other direction and even fuel prices higher. So I'm unable to reconcile this. And this is where, although I don't have evidence, but like you, I heard stories about the position of the UAE and Iraq within OPEC. But I think the main disagreement was on the scale of the cut, because originally it was around 1 million barrels a day, and then they jumped to 2 million barrels a day within 24 hours. So that by itself give legitimacy to some of these points that you mentioned, Sean. But at the same time, I don't see how to reconcile them with the fear of slower economic growth.
Osama, I wanted to get your thoughts on this sort of geopolitical fracture between Riyadh and Washington, because it kind of reminds me a little bit about what the relationship between Pakistan and the United States has sort of eroded into. That sort of what was a very close relationship historically vis-a-vis the Afghan war, during the Russian invasion of Afghanistan, and all of the periods that Karachi and Washington have been quite close, and then it's been fractured. I'm wondering, what does your perspective to the Saudi-US relationship, does it look like it's going down the same path?
As Carol said, I think I agree with her. It's not going to be in binary terms, like, take, for example, Pakistan. I know that there has been a downward trend when it comes to our relationship with the US. But still, the US remains our largest market in terms of trade partner. We have a lot of agreements. Right now we are under the bailout program of IMF. US has helped us more in terms of financial help than China. In fact, even in the when we were on the brink of a bankruptcy. So I think even despite the downward trend, Pakistan is still attached to the US. Pakistan still depends on the US. The current administration, the other officials, they are trying to reignite the relationship, rekindle the camaraderie. And I think the same will hold in terms of Saudi Arabia and US, because apart from the economy, apart from the oil, there still remains a lot of other revenues, especially geopolitical, geostrategic avenues, which requires the cooperation of US and Saudi Arabia in terms of Iran, in terms of Afghanistan, and other countries of the region. So I don't think there might be a downward trend. It was there when we had that Khashoggi murder saga, but we saw that it wasn't like that. Biden visited US trying to rekindle it, and I think we'll see a redux of that, even if things go down that way.
Neil, looking at Europe and the situation with the obviously the ongoing escalation, it would appear with the conflict, the new general from Russia has got some scary name branding. I think they call it what, Armageddon Boris or something like that. But nonetheless, we've had the attack on the energy infrastructure, the Nord Stream pipeline, the bridge, the nuclear power plant. Where is this going, do you think, and where is its impact for the energy markets?
Well, by all accounts, it looks as if it's getting nastier. The Russia, there's no way out for Russia. They have to carry on. It would be a national humiliation. And of course, on the other side of the dispute, the European Union and the United States and the other countries have gone all in support of Ukraine. There's no way out for them either. So I think we're dug in for an increasingly nasty conflict. The sanctions take effect in a few weeks' time, and we are going to have to get used to the fact that Russian energy supplies are going to be very, very severely constrained. Fortunately, here in Europe, as far as gas is concerned, it looks as if the stocks have been built up to pretty high levels. So we should get through a winter on the assumption that we have average temperatures. But of course, the fun doesn't start until next year, because when we have to come to restock here in Europe, we've been restocking in 2022 with lots of Russian gas, but that's not going to be there in 2023. And then the difficulty starts about how you go about doing that. And of course, let's just link this to Pakistan, because a really interesting point here is that the scramble for gas supplies in 2022 by European countries and by other Asian countries has meant that some countries, such as Pakistan, have been shut out of the LNG market. Pakistan put out a tender recently for LNG. Nobody wanted to supply them, presumably because they weren't willing to pay high prices. So this is not just Europe. This is also affecting some of the leading developing countries, including Pakistan.
Yeah, the contagion is certainly not nice. Osama, you just want to jump in briefly there?
Yeah, I just wanted to corroborate what Neil said. So recently, our minister said this point blank, that there is no gas for the winters. That's what he said on national television. So
there's no gas for the what?
For the winters. There is no gas. Yeah. So this has happened. I mean, this has started to happen already here.
So you'll have to use fuel oil again, presumably.
Yeah.
Yeah.
It's
wow. That's a severe consequence. I mean, the contagion of this crisis leaves nobody untouched, it would appear. Let's get the survey question of the morning, which is sort of touching on the theme I opened with, and that is the legacy of this US-Saudi war of words. How would you rate the US-Saudi war of words? Is it a storm in the teacup? Is it a serious diplomatic rift? Is it the new Cold War that we talked a lot about last year, which is sort of like China, US, and at some point everybody's going to have to choose a side? Is this the beginning of that sort of side differentiating between Riyadh and Washington, or for it too will pass, which is kind of what Osama was pointing towards? Serious diplomatic rift, or, take your pick, really. Looking forward, Carol, to the oil price outlook and the market outlook, generally it appears that the downward trend has returned since the OPEC decision, at least in the last week, that the revisions of global economic growth continue to be downgraded. And as long as that's continuing while interest rates are rising, oil price will be falling. Your thoughts of that narrative?
Well, you put it very beautifully, Sean, summarizing the key strong opposing forces at work today. You have, on the one hand, the economic outlook. On the other hand, you have the supply outlook with OPEC Plus, with the sanctions. How will Russia react, for example, or how effective the oil price cap and the sanctions, European sanctions, are going to be on oil markets. So I expect volatility to continue. And it's not going, I cannot confirm from now that downward trend is going to continue, but we should expect to see volatility. To go back on the issue of Russia, it was interesting to hear yesterday President Putin making the statement at the energy meeting in Moscow, whereby he told Europe that Russia can easily send gas to the EU, but it's only up to the European governments. Well, on the one hand, he's trying to shift the blame of high energy prices on government, though that contradicts what he said later about praising OPEC Plus measure, because you cannot blame the EU on high energy prices and then go and say, well done, OPEC, for putting upward pressure on oil prices. But it also, on the other hand, it also reflects his weakening position. It shows that Russia is trying to get away around the sanctions, trying to appease the pressure from the sanctions on its economy, on its energy exports, because they are, I mean, of course, many people say, oh, Russia has been winning this war because they have not been weakened significantly. No, they are being weakened gradually, slowly, but surely. And the longer the sanctions stay in place, the more detrimental effect is going to be more notable on their oil and gas production and exports and revenues. So I expect to see continuous volatility in oil markets, but also it's interesting dynamics in gas market. Let's see how Europe is going to respond to what Putin has been offering in terms of sending more gas this winter to avoid, to quote, I think it was the head of Gazprom who said, to avoid lands freezing in Europe this winter.
I wanted to just ask you, Osama, about the vote yesterday in the United Nations. We had the vote on the Ukraine situation. The United Nations General Assembly vote on the territorial integrity of Ukraine. We had 5 countries oppose it, maybe the usual suspects perhaps, including Russia. But 35 abstentions, one of them India. Now, we know India has been kind of on the fence, at least presenting that posture. But for India not to, as a democratic country, stand up to or stand against the territorial integrity of Ukraine, I'm kind of surprised by. Your thoughts, obviously sitting in neighbor Pakistan, was that a surprise to you? What do you think?
Look, I mean, and I don't know if people like this train of thought or not.
Pakistan also abstained.
Yeah. So we live in a world, I believe, where ideals and ideologies have taken a backseat and pragmatism and realism has come to the fore. So for countries like Pakistan, for India, for other developing countries, and who depend mainly on energy imports, it makes pragmatic sense for them to walk a fine line, right? They don't want to take sides. They don't want to be labeled.
What happens the next time Pakistan wants some sympathy on Kashmir?
Yeah, I know. That's the thing. But I have told this even on this podcast as well, that I am a very strong supporter of Pakistan getting Russian oil. Why? Because it will help us domestically. India has been doing it. Other countries have been doing it. I know ideologically this is not good. From a moral standpoint of view, it's not good. But then there are millions of things happening in the world that do not check the box, right? So these abstentions was actually pretty much expected, and I would expect other countries to do the same countries maybe to repeat this as well.
Yeah.
Well, the erosion, I suppose, of kind of, I mean, not that one would stand on principles here, but nonetheless, if the UN becomes it's the last line on some of these sort of lines of civil and human rights, et cetera, Neil, giving you the last word this morning with the survey result, looking ahead onto the direction of travel, if we're expecting a somewhat bearish outlook from the IEA, and we get obviously the already downward trend in the market price. China is still on the sidelines. Oil markets, Brent could break through 90 again, it would appear, in the coming days while we go away for the weekend.
Oh, possibly, yes. Again, the agency's numbers will come out soon. Just picking up on these demand numbers, Carol mentioned earlier on about the fact that OPEC had cut back their demand growth outlook. And I think I'm glad they did, because I thought their numbers were ridiculously high. And gradually, I think they've started to see sense. So we'll wait for what the IEA comes out with, and whether, in fact, the fears of lower demand growth will continue for the short term to outweigh fears of lower production, which is what I think is going to happen. And prices will I think, stay in this sort of gently deflating mode that you referred to at the very start of the podcast. Quickly, finally, on picking up on Osama's point about Pakistan, India sitting on the fence as you described it. All the time I was in the agency, the IEA, we had regular meetings with Indian officials, and they were always complaining about rising dollar crude prices, because India is a big importer and it's a major cost to them. And rising dollar prices for India often coincided with a weakening of the rupee. So it was a double whammy. And so for India to have the opportunity to buy very large volumes of Russian crude oil during 2022 at discounts of up to $30 a barrel, and maybe even a little bit more earlier in the year, is unmissable. And in some respects, in wearing a real politic sort of mindset, I don't blame them for doing it.
Carol, before we let you go, I meant to ask you your thoughts on the growing narrative that maybe the Fed is doing too much too quickly. It seems to be creeping into the headlines. Bloomberg and others are starting to flutter it around. Your thoughts on that, because the direction of that could be quite significant for everything.
Yeah, I don't think already people are complaining about it, but I don't think it's going to change the mindset of the Fed. I have to see what the Fed is saying and not what the general media headlines are saying. And so far, we haven't seen any leniency yet coming from the Fed. So I expect them to maintain their determination to tackle inflation at any cost.
And also hearing some fighting words out of the central bank governor in the UK on this whole pension issue. The sort of monetary policy makers are starting to show some muscle. The party is over, clearly. The 10-year binge is coming to a close, and adapting to that is obviously a very hairy sweater. Thank you, Osama Rizvi, as always, from Pakistan, Neil Atkinson from Paris, and Carol Nackley from... I'm not sure where you are. London, are you? London. Okay. Yeah. This time it's London. London, Paris, Germany, New York, London. London. So thank you, Carol. Have a great weekend, everybody. We'll be back Sunday, 10:30 UAE time for Week in Review.